Welcome to Shivkumar classes. Now I am covering the topic on activity ratios or turnover ratios. Already in my previous video, I have given the formulas of the short-term solvency or liquidities. Now, almost around 7 formulas are there in this. Out of that, I am working out only the inventory turnover ratio to avoid the lengthy video. In my another videos, let me explain about trade receivables turnover ratio and debt collection period. Both it is relating to credit sales and the debt collections. And in my next video, let me explain about trade payables turnover ratio and debt payments period. And fixed asset turnover and working capital, I can give it into the one single video, and its link will be provided into the description box. Now coming to inventory turnover ratio. What is this inventory turnover ratio? Inventory means stock, turnover means sales. Therefore, alternatively we can use, in place of inventory, stock can be used. In place of turnover we can use the sales. Don't get confused. Okay. These ratios are also called as the activity ratios. Now the formula is cost of goods sold or cost of revenue whole divided by average inventories. Average inventories means that opening inventory plus closing inventory divided by 2. Then what is this cost of goods sold? Cost means that it does not include the profit. Therefore, from the sales, I should minus the gross profit. When I minus the profit from the sales, the available answer is called as the cost of revenue or sales. Next, coming to, we can't expect in all the problem they will give the profit. So that another alternative formula is, if the gross profit is not given, we have to apply this formula: opening stock plus purchase plus direct expenses minus closing stock. This is purchase means that net purchase. What is this net purchase? Purchase minus purchase return. Next, coming to next one is, what is this direct expenses? Direct expenses means any expenses which is occurred during the time of purchase or during the time of manufacturing. Now direct expenses is equals wages, carriage or freight inward or octroi or any manufacturing expenses. Yes, this average inventories which have been explained already. Opening stock plus closing stock divided by 2. Sometimes in a problem only opening stock will be given, closing stock will not be given. At that time, the entire opening stock is treated as the average stock. Do not divide it by 2. In the same manner, entire only closing stock will be given. There will be absence of opening stock. At that time also, the entire closing stock is treated as the average stock. No need to divide it by 2. Yes, that is the information I have written here. If either opening or closing stock is not given, then the given stock itself considered as average stock and no need to divide it by 2. Now let me work it out one simple problem. Yes. Opening stock is equals 20,000. Closing stock is equals 30,000. Sales 5 lakhs. Gross profit 1,50,000. Calculate inventory turnover ratio. Inventory means stock. Okay, fine. Yes, what is the given formula? Inventory turnover ratio is equals cost of revenue or cost of sales divided by average inventory. Yes, we know that first we have to find the cost of revenue. Second one is the average inventory. What is this cost of revenue? Cost of revenue is also called as COGS, cost of goods sold. Cost means what it is? Out of sales, you have to minus the gross profit. As per this problem, the sales given it is 5 lakhs. Now you can see this. Sales is 5 lakhs. Gross profit is 1,50,000. Now 5 lakh minus 1,50,000. The available answer is 3,50,000. This 3,50,000 is called as the cost. And we got the numerator one. Now we have to find the denominator. Average inventory. Next line. Average inventory. Average inventory is equals opening stock plus closing stock whole divided by 2. The opening stock was given in a problem is 20 and closing is given it is 30. Therefore 20,000 plus 30,000 whole divided by 2. Therefore we get 50,000 divided by 2 is equals 25,000. The average stock also we got 25,000. Now let us apply to do this problem. My cost of revenue I got it is 3,50,000. 3,50,000 whole divided by 25,000. Yes, 3 zeros cancelled. 12, 14. So we get 14 times. 14 times. This is the answer. Thank you very much for watching this video, and further explanation will be given into the another videos.